Okay, so good evening everybody and welcome to the Audit and Risk meeting. This is a meeting of the Council held in public. It is not a public meeting. There's no fire drill planned, so if the fire alarm sounds, please leave by the exit nearest to the large screen at the front of the room and proceed down the fire exit to the courtyard. Once it's safe to return, councillors will receive a text message. Officers will also advise when it's safe to return to the meeting. We are recording the meeting this evening using our webcasting system. The webcast will be transmitted live and will also be available on the Council's website following the meeting. All mobile devices should be switched off or set to silent so that the meeting is not interrupted by ringtones. Have you all done that? Yep. Well done, everyone. Okay, so we got any apologies for absence, please?
Thank you, Chairman. Apology from Councillor Davis.
Thank you. Any declarations of interest?
Yeah, I chair Audit Risk Standards and Constitution at County.
Okay, thanks for that, and I take it I can ask for your advice then, knowing of your experience.
If you can afford it.
Okay, minutes. Has everybody read the minutes and do you all agree with them?
I can't.
Right, so 2 for, 2,
Thank you.
2 abstentions. External audit update. Who's up for this one? Okay, thank you.
Can I just check, because it's actually presentation of the draft annual financial report. Just wanted to check.
On my it's external audit update. Right, so that's the new one. Okay.
So it's the draft annual financial report. So thank you, Chair. This is the draft report, our draft accounts for 23/4. We always bring them to the committee prior to you receiving the external audit findings. We'd normally bring them to you a bit earlier in the year, but due to the ongoing delays to previous audits, there was a delay to the publication. So they were actually published in the end on the 9th of August. Enclosure 2 is the full report. It's, as always, a very technical document. As we say in the report itself, we're not expecting you as members to verify figures, but we're obviously happy to answer any questions on said figures or processes around preparing the accounts. And we obviously provide assurance that these have been prepared on a going concern basis, which means we expect the council to continue for the next 12 months based on its financial position. This is based largely on the level of reserves held by the council, so we continue to have a well-managed level of reserves for a range of scenarios, and we've also got a plan to deliver our budget for the current year, and we've adjusted even our budget for the forthcoming year to reflect what we're seeing in the current year. There's a commentary in enclosure 3 which takes members through the different statements included. There's some core statements which include the comprehensive income and expenditure account, the balance sheet, the movement in reserve statement and the cash flow statement. They're the core statements, and there's 2 supplementary statements members will be familiar with, which are the housing revenue account and the collection fund. Again, they're ordered throughout the financial statements. The broad summary on each of them would be, in terms of our revenue position, it reflects our report that came to Cabinet back in July last year, where there's been a contribution to reserves to offset some overspends that were reported in that report back in July. The HRA was largely balanced. Our balance sheet continues to be healthy, but reflects a couple of things. We've reduced our overall level of treasury investment, where we made some short-term investments, and we've also had a slight valuation reduction in our commercial assets. So there's a corresponding reduction in our overall balance sheet, but it's still nevertheless a positive balance sheet. And our cash flow position is slightly down on last year, but we're still holding at year end £21 million of reserves circa. So again, still a healthy position, still well managed. The Treasury position we'll come on to in the next report. And really, I think probably the other thing to note is that this statement leads us into the following meeting on the 24th of February, which has been scheduled. External audit will come and give you a view, not just on this year's accounts, but the 3 preceding years' accounts. So you will get a report on each of those where they will give you their opinion on any issues raised within the statements, and you will have an opportunity at that meeting, obviously, to ask both us and them questions. So I'll stop there, Chair, and just throw back to if there's any questions.
Councillor Headley.
Forgive me, I just want to get some clarity around, you said the previous 3 years, so that's 21, 22, 22, 23, 24, 25?
So 1 year back, 2021, 21, 22, 22, 23 and 23, 24.
So we've had no external audits with opinions during that 3-year period for those 3 reporting
that's right, and that's
years.
quite
And
consistent with
our external
sector.
auditors failed to meet the backstop date.
Yes, they did not meet the date on the 13th of December, and the reason for that, they had a reasonable exemption, which was a legal matter outstanding. So that was within the backstop arrangements deemed to be a reasonable matter for delay.
So for the benefit of residents, I think it's important that external audits are done on time. I kind of do understand the issues that the audit world had generally. I don't think it's just a problem for Basildon. But essentially, how do we judge the value for money of the way we've spent taxpayers' money over those 3 reporting financial periods?
So alongside the statement of accounts audit, there is a value for money conclusion being issued. They are continuing to perform the full value for money work. You will get one report from BDO which covers the first 3 years, and you will get a separate value for money report from Ernst & Young for the final year. So you will receive some assurance on value for money.
Okay, so are you anticipating a full and complete external audit on all those outstanding financial reporting periods?
So you'll receive a full value for money report covering all the period, but you will receive disclaimed opinions on the actual financial statements for 21, 22, 22, 23 and 23, 24.
If I can address the chairman on this issue, I think one of the primary functions of any member-led council, particularly a cabinet council, is that we are able to demonstrate financial probity and that we are efficient. We rely on our officers. I have no problem with the officers reporting it at all, but that external audit is the proof we have that we are financially viable, that we are managing the resources of the council in the appropriate way, and that we're not going to get ourselves into a situation where we may be required to issue a 114 notice, which I think something like 60 councils have already fallen into that trap. I think it's essential that I can guarantee one thing they will do on time. They will send in a bill, and it won't be the one that you had quoted. It will be increased. And I think if I can, through the chairman, ask, I'm assuming our external auditors were appointed through PSA or PDSA, so we don't have a direct contract with them. So can I recommend that if there are any increased fees, that we go immediately to arbitration to prevent us having to pay those additional fees? Thank you.
Councillor, can I just comment on that? So the PSAA process, they have to automatically submit requests for additional fee to them. So it effectively goes to arbitration as a matter of course. What we expect is for 2021 they've done a full audit, but they've also looked at our commercial investments and our group accounts which weren't contained within the original fee. So there's reasonable grounds for the additional work in those two areas. For the 3 subsequent years, the PSAA are working with the audit firms to set an appropriate level of fee for a disclaimed audit. So we expect that to be a reduced fee for those 3 years, but we haven't got confirmation of where that value ends up at.
I can follow up on that. My understanding is that the contract period with our current auditors, the ones that are behind with all their work, has now lapsed, and we've entered into a new contract with another firm of auditors. Is it your understanding that those auditors will also be presenting disclaimed audits for the next 2 years because they can't complete their work, because they can't get the backwards look on the work that was
Absolutely
done by the
right,
current?
Councillor. So obviously their opening balances will be based on a disclaimed opinion. So for this than 23/4, the set of accounts we've got here are the first set they're auditing. So they will have to rebuild their assurance over the subsequent years. So certainly the first one is a disclaimed opinion, and then the level of work they decide to do will be shared with us as a committee as they progress through into the following year. But their goal is to rebuild that assurance level as quickly as possible. And that's kind of the purpose of the disclaimed opinions, to prevent historic issues holding that back. So we then start on that path. But yes, you're right to say, until that assurance is rebuilt, we will have disclaimed opinions till that's ready.
I think I've made the point. I don't want to overdo it, but I think it's essential that we're in a position where we can give residents of the borough some confidence that there isn't a financial issue of our making anyway. It's very difficult to explain to the residents that it's an auditing issue nationwide. But I think, with the indulgence of the chairman, I think we ought to have regular updates on the progress of the audit to make sure that there are no other issues that come up next year where they're unable to give a proper opinion. I think disclaimed audits from external auditors is probably the least worst option after getting a negative report that you've mucked up somewhere. But I think it's essential that we do keep on top of the external audits. I'm assuming that all the papers for all the financial papers that the officers provide were given to the new auditors in May, in time with the deadline?
Yes, Councillor, they receive all the papers, they perform whatever level of audit work they can complete in the time, and there's a sort of minimum standard, so they will check all of our records back to our statements. So they're not doing nothing, but they're not doing the detailed testing they would normally do. The other perhaps slight element of assurance I could probably give you is that in the course of their VFM conclusion work, they will tend to look at all major decisions the council has made in that period. So there will be more scrutiny of specific large decisions that have happened. So that will still happen throughout, and you'll get that for all 4 years to date. And obviously we've got this one legal matter outstanding. That was them looking at our commercial investments, for example. So there is some assurance, and I'd encourage you to have a dialogue with the external auditors when they come to the committee to follow up, to just
I think this is essential because given that there was a change of administration in last year at the elections, there hasn't been, to the best of my knowledge, there hasn't been an emergency budget. So the budget would have been the one that was presented by the previous administration back in March or whenever it was, 24. And I take it the new auditors are doing 24-25 accounts. They're not doing 23-24 accounts. So there's quite a lot of work for them to catch up. And we already know they're going to provide us with a disclaimer, which is not the best outcome for us as a council, but I'll leave it there.
I just want to jump in on this for a minute. I agree with you, yes, we can ask the officers for regular updates, and we'd appreciate that, and I know that they do them anyway, but we can also ask again. The other thing is, as a small business owner myself, and anyone else in this room that's got business, we all know that and I've said this to you before, if I submit my accounts late, I get fined. So why can't we do the same? You know, this just me chucking ideas in the air, but why can't auditors be fined for things like that? And it would be a great thing to make them concentrate and get on with the job, wouldn't it? You know, but there you go, that's just my thoughts. You want to come back on that, don't you, Mr. Cairns?
I'd rather you didn't ask me that question, but maybe the officers can.
Yeah. Well, all I'd say is, Chair, that as we said before, that PSAA process is the process, and we are entitled to make representations within that process, which we will if we're required to. And obviously they take account of, obviously they're dealing with lots of these situations, as one of the councillors noted earlier, across the sector. So they are having to come to judgments about what's the appropriate fee level for disclaimed opinions. We desperately need to catch up and get back onto a future-looking footing, so that we're not 3-4 years behind. And I think ultimately, when we get to that point, we need to keep an open dialogue with the current external auditors about that, building that assurance level, and we'll support them to do that wherever we can. So.
Okay, thank you very much. Just make sure that we don't get into that situation again. Otherwise, we'll have this argument again, or this discussion. Councillor Murphy, what would you like to say?
Oh, my thing's working. It is. So, the way I understand it, 2021's, we've got the full audit. So that can be signed off, filed, we're all happy. As from 21, 22, etc., we've got these audits that are not complete. Going on from what Eunice said and Councillor Henley said, Henley?
Well, it doesn't matter.
Could we perhaps put in a definitive timetable with these auditors and say, look, you're behind, it's putting inconvenience to us and everybody, we want to get this signed off. How long is it going to take you? Give us a definite figure and work to it. None of this, oh, well, we'll get it done in March and then come along in March and say, oh, well, it'll only take another 2 months, and then in March, April, May, oh, it'll only take another month, 6 weeks. You know, if I've got to do something, as it said, I've got to get my tax in today, as it happens, it went in 3 or 4 weeks ago. But, you know, we have to do all this.
So,
and as a council,
yeah.
we should insist that it's done. We should not be in this position.
So believe it or not,
Oh, sorry.
there is a set of statutory deadlines that create that timetable, and usually the auditors then share a timetable within those deadlines. Obviously, once you miss 1 year, it knocks into subsequent years. But they're statutory deadlines, and just to draw a distinction to what you were saying, Chair, about you get fined if you... Obviously, that's working to a different set of statutory rules where there is a fine system in place. It's not the same system we're operating under, it's a completely different system. But I know that the incoming auditors will, and all auditors would strive to and want to deliver to a timetable within that statutory deadline, Councillor. The key is to take this as a cut-off point and really get back to that. Well, for years and years and years, that's what happened. And it's only since 2021, really, across the sector, that deadlines started being missed on this sort of scale. So I think there's clearly a desire, and there's a government initiative that's central to bring this back on track, which is part of the disclaimed opinion approach. And hopefully we're going to get back into sensible timetables, as you say.
But can I ask one question? If 2021's done, when is envisaged the next one done, i.e. 21, 22? When is the next envisaged total, full, signed off in the filing cabinet?
So these are the disclaimed opinions. They're coming to the same meeting. So they're all coming together. So we should have all of them together. And so we'll have signed accounts for 2021, 21-2, 22-3 and 23-4. But the last 3 are this disclaimed opinion. So they're doing limited work to catch up, basically. And they're issuing a VFM conclusion, which will look at all of our major decisions through the year and anything they want to comment on. And that will all wrap up, hopefully, if we get everything we need in time for the 24th of February. We're certainly hoping the BDO 3 years will be ready. And then if that's ready, EY can bring theirs because they're almost ready as well.
So when you say it's a disclaimed one, what strength have these accounts actually got? Can they just be filed and forgotten about, saying we're happy with them, they're okay, there they are, they're in the filing cabinet, never to be returned to unless something is found in the future that is need to go back? Or are those going to need more work? And in which case, I'll ask the next question. If they need more work, I'll go back to my original question, when is a deadline going to be met to each year? So if we say 3 months for one, 3 months, so by the end of this year, they're all fully done, and then we can work on the 23, 24.
So for the disclaimed opinions, they'll do as much work as they can, and they'll come and tell us and you as members how much work they've done. There'll be a minimum consistency check with our underlying records. There'll be, you know, a to be determined level within a time frame. So they'll do as much as they can, because they're trying to start to rebuild assurance already. But we know it's going to be very limited for these first three, because it's literally time to catch up, essentially. So once they've got there, the next set is 24/5. We've got then we've got a new statutory deadline for that. They will work within that time frame. They will have more time then to start rebuilding the assurance. So I expect we'll get a more thorough audit of 24/5 than the previous 3 years, because the timescale's available. They've cleared the backlog, as it were, and they're now back on track in terms of timescale. But the problem they've got is that the assurance they've got from the 3 preceding years is very limited, because they've only done the limited work.
I asked the question a couple of meetings ago, could we start and do the 24, 25 and then add in the figures? And I was assured that was not possible. So if we haven't got the full accounts, we've only got a short one, how can the new company really start doing it if they haven't got a starting point?
So so as a council, we've provided accounts for all the years, the same set of accounts we would normally provide. So they're all being audited up to and including the set we're bringing here tonight, 23/4s. So we've got accounts. They know they agree to underlying records, but they haven't done full testing on them. So what they will take is they will roll forward, but they know the opening balance position they haven't done full testing on. So they've got to rebuild that assurance, and that just means they will need to do more testing in the future. So they can start the following year's accounts knowing what their start position is, and they can audit them appropriately. But they'll be doing it within a revised time window, which hopefully gives them more time. But to the extent they're not comfortable with anything that rolled forward from 23/4, they will comment on that in the report, and they will issue probably a disclaimed opinion again, but a disclaimed opinion with a greater level of assurance across the statements. Eventually, they will rebuild the assurance to where, so in the second year, they may well be happy that their opening balances they're now largely happy with. If they are, they will then issue a full opinion at that point. So we've just got to work through the timescale, as every council has to do this.
So basically what we're saying, we could end up with 3 years we could end up with 3 years which are not 100%, I'll put it that way.
Yeah, that's exactly
forever.
right.
So if somebody went back in 10 years' time to discover 500,000 missing,
Yeah.
they would say, well, it's disclaimed, everybody did it.
The opinion won't change. The opinion will be the opinion they issued, which will set out what they did and what they didn't do. So, yes, you're right to say that that's then the opinion.
Councillor Jeffrey, you want to get in on this?
Thanks, Chair. Just, I think if we look at it with the proposed government's devolution, we're having these audits that technically we don't know how everything will stack up. So when this council is inevitably abolished, you're going to move into a new set of accounts. As the county report notes, other councils haven't had fully audited accounts either. So essentially what we're saying is we don't know the financial position of most councils in Essex. We just simply don't know. You can have a limited amount of assurance. So what's happening is when we roll off that line of whatever happens, the council will be in the position of not just looking at this financial statement here, but in forthcoming ones as well, particularly with investments, which is how the council recently has tried to generate money. you're going to have all of that compounding into one mess, and we essentially we'll be flying blind when the new council gets set up. They'll go, oh, well, we don't actually know, we can't be fully assured. So when those auditors come in, you know, they're going to be in a really unenviable position of saying, actually, hold on, there's a lot of money missing.
Okay, how do I? Yeah. So, what I'd say, just touching on, I think you mentioned commercial investments. So the commercial investments will have been audited fully in 2021, and the ones that took place prior to that previously. So that there will have been that full assurance on those. But yeah, if we're in a disclaimed position, you will be getting more and more assurance. So say, you know, a new council is formed in April 28. We would expect to be close to back to full assurance by then. So we're hoping that the auditors have progressed their work to that point. And obviously, you're right. The other if Thurrock was the other council, they are in the same position. They have disclaimed opinions coming, I'm sure, for the same number of years. And most councils across Essex, as you said, are in a similar position. So it will really just depend on how much assurance have the auditors built up, and they'll continue to build up whatever the body is, whether we're one body with Thurrock or we're separate bodies or whatever. But their process will be the same, that they're starting to build up assurance to a point. Now, yeah, it's very difficult to judge where they'll be. I'm not as perhaps pessimistic, because I think there's some assurance. There's lots of other controls that apply at councils. There's Mike and his internal audit team, for example. There's lots of reviews of financial management by councillors and processes that happen, but it's that external part that's missing. And appreciate, you know, as members, that there's a lot of you know, value in that. But we're within this process, and we've just got to follow it through. We certainly provide everything we can to assist the auditors. And as I say, you're also getting, remember, that view of major decisions. So we've been in recent discussions on value for money on a range of issues with our auditors, and they are looking specifically at some decisions, which I'm sure as councillors, there's alternate views on different sides of the political spectrum. So there is some assurance. And again, I'd encourage, when both sets of auditors come at the following meeting, to just have a bit more focus on that rebuild of assurance, because I think they will be able to give you a greater steer on how they're going to do that.
Oh, go on, sorry.
I think my main point was that we don't know. You can say it's an assured opinion, but it's not a full opinion. And it's fine to say I'm assured, but I'm sure the Thurrock was being given assured opinions, and then they went pop. And this is the problem, that if we're going to roll off the factory line into a new council through this process, we don't know. We don't have the full sign-off, as Councillor Murphy and Councillor Headley were saying. We're at that point now where we don't know, and we've taken on more risk since May. So the stakes are getting higher, and it's, you know, fine to say they will build it up over time, but when you look back, it'll be the accounts, because I don't know if you've ever seen the movie The Accountant. He will go back, when someone goes back through it, and they will find it, that if something's not been done properly. Didn't mean to plug it, but it's a good movie. But that's what will happen, is someone will go back through it and go, actually there's a glaring issue here, because it wasn't fully assured.
It's totally reasonable to say there's a gap in assurance. That's absolutely reasonable, which is what you're saying, and we totally accept that. I'm just saying that where you reference some of the increased investments during the year, I'm sure they will be the focus of review for value for money conclusion. So you may get more assurance than perhaps we think at the moment. But yeah, broadly, that the full audit process that normally happens is not happening, and it's reasonable to say that. I think there's lots of, as I say, there's lots of other processes and decision making around it. Things come to cabinet and to councillors for you as members when there's a major decision. There's lots of supporting information in there, and that's why those key decisions often become a focus of external audit in their value for money work. So I think the way I look at it is that the standard full audit process may not happen. There will be some checks that get stronger and stronger over time. Key decisions will be looked at, and we will then be missing the fuller part of their testing that they do. So that's where the gap is. It's very hard to judge how exposed we are as a council, but obviously, you know, the auditors will seek to get back to that level of assurance quickly. When they do, they will have assurance on opening balances, which will, by implication, pick up some historic decisions and balances. So they will eventually be looking not just at the current year, but the things that are carried forward into that year. So the opening balance sheet in each year reflects everything that's happened prior to that. When they say we've got assurance, they will then be covering a lot of those previous financial transactions. So we're in this sort of, you know, we're in this dip in the process, and at the bottom we're not getting a huge level of assurance for those 3 years. But there are processes to bring that back, and there are other things happening as well. So, but appreciate it's reasonable to be worried about where the gap is. So.
Just as I say, it's when we have, say, the investments, even ones that have been made before I entered office, we can always say they're forecast to generate this revenue, but until we've had that full year, and like, say, the decision on the Westgate, I don't know the technical details in full, but when that slowly comes online for whatever they wish to do, that's another forecast risk that we have to look at. So essentially more of the council's risk will essentially be, well, we'll assume it will generate revenue at 2% each year and then have that go off into the sort of sunset. So it's, and this is where my concern comes from, is that when the councils do shift, as it may be anticipated, we're handing over what is not a full, complete picture, and it'll just be left to those councillors to pick up the pieces, really.
Yeah, I think on things like that, we obviously bring financial management reports. So you should be seeing, if there's an issue with, say, the income on Westgate, we would be projecting that forward as an overspend, effectively, in our financial management quarterly monitoring. So you should see things like that, your sort of day-to-day service, where you know something's happened. There's still other mechanisms that will report that to you, and you will see the impact of that. Ultimately, that we would then report that in our financial accounts, whether they're audited or not, and we will, all the impacts of that will therefore be presented to you in both reports. So that's what I mean. We're still reporting everything that's happening, and we will still, obviously, we pull that data from our system to create those reports. So it's not going to get lost to you as members, and you're entitled as members to obviously ask questions about specific things of that nature throughout the year. So we would always answer questions, whether it's directly through member inquiry or through our budget management process.
Yeah, okay, thank you, Councillor Jeffrey. Next is Councillor Murphy. No, do you want to go? Right, Owen.
Thank you. I was just really going to try and summarise perhaps some of the discussion just from sort of my perspective and from the officer's perspective. I think everyone appreciates this situation is far from ideal, and obviously it's been building for a period of time. I think where we've got to with the new regime that's put in place, with disclaimed opinions, obviously working on the new appointment of the external auditors for the new contract, we have now at least got an end in sight and a programme to get us to where we need to get that full assurance. So it's not ideal, but at least we now have a set out plan to get to full assurance for our accounts. I think members can take comfort that there are lots of other controls in place. Obviously, external audit is an independent assurance. Obviously, an audit is never going to be 100% assurance. I think, as you're saying, there are issues perhaps in other accounts, issues 114, notices that weren't picked up during an audit as well. So it's not a full assurance, but we have lots of things. We have the budget monitoring reports been quarterly. We've got our 37 control areas that we bring as part of the AGS. So lots of other controls that we can take assurance from as officers, and you can as well, to show that although you haven't got full assurance, there is a fairly high level of assurance on the accounts and financial statements going forward. And as LGR comes forward and we look to merge and come to new organisations, obviously that assurance will be building, and the auditor will just take that as part of that assurance building process. So as we come together, they'll bring the balances together with that level of assurance they've got, and obviously continue that process if it isn't complete in that sort of point in time. So I think it's just worth summarising where we are. So obviously it's not ideal, but there are processes in place, and it is partly reassuring. At least now we have got a process to get to the end goal that we all want to achieve.
let me first say that obviously I, as a councillor, have got great confidence in our officers. So we feel that the external audit is a check and a view, not necessarily a thing, something to beat you with. The only last thing I was going to say is any way, obviously we're talking about big and little. So obviously we've got some big things, £80 million buying houses, for example. Can we cherry pick and say, can we look at that closely, make sure everything's all right, onto investments, make sure that's all right. Forget about if we've lost 2,000 elastic bands, because the implications of losing 2,000 elastic bands or a few sheets of paper, albeit money and albeit shouldn't be go missing, you know, the reality of it, a couple of grand in elastic bands and paper is not important if £8 million goes missing out of the housing budget, or where there's more money, even a small percentage is an awful lot of money. Where there's not much money, a large percentage isn't a lot of money. Thank you.
I think that's part of what the auditors will do. I think as Jonathan was talking about. So, for example, as part of the value for money opinion, the auditors will look at those key big areas and they will focus on those. And as they get through the audits as they develop, they will automatically, they'll spend more time and they'll prioritise those high risk areas, and that's what they do generally anyway. So they'll plan their audits and spend more time on high risk areas. So that happens as part of the automatic audit process anyway, as part of how they plan their audits.
Here we go, I forgot, sorry. Capital and investment strategy for 25-26. Who's up for that? Is that you? Do you want to have a break?
Yeah, thank you, Chair. So this report sets out the proposals for the Council's capital and treasury management arrangements for 25-6. These arrangements are in accordance with statutory requirements, non-statutory guidance from government and best practice from SITFA. So this is a standard document we have to produce every year as a council. It basically sets out our capital plans and how we're going to fund them, essentially, but it also covers our treasury management processes. We brought a revised capital programme to council, I think it was back in September, and obviously you as members have referenced one of the large things there was the additional TA budget, which was aimed at the additional housing. That was an additional £80 million. And also we've had a conversation about Westgate, which was the other large item. So obviously the Westgate was a 24/5 thing. The temporary accommodation is part 24/5, part 25/6. So the whole programme was updated to reflect those two things. And obviously we've then taken forward revised requirements that the HRA would have on its capital programme and the general fund wider capital programme. I think it's fair to say that just those two things alone have added broadly about £100 million in debt when they come to their conclusion. But obviously the temporary accommodation is generating sufficient savings in the general fund from taking people out of high cost temporary accommodation. And Westgate, as we've just been having that conversation, is definitely has an income stream attached to the retail units that funds the cost of taking that on in the short term, and obviously provides a wider strategic opportunity for the council in the longer term. So the framework sets out the projected programme, projected treasury requirements to fund it, and a couple of things to note aside from the actual changes to the programme. Obviously the increase in debt means we've moved our prudential indicator on the maximum level of debt we hold, because we've had to accommodate that additional capital. We've got some new rules that are reflected in this year. There's something called IFRS 16, which God forbid any of you have to sit and read. But broadly what that is a new requirement on leasing. And the impact of that, we've got three big commercial leases. Broadly is they need to be remeasured annually, which is a new requirement. They used to sit at a fixed value once they were set up. The remeasurement largely takes account of the future cash flows attached to that lease. And traditionally what we're seeing on the first few that we've assessed is there's an upward trajectory on the value that will sit on our balance sheet initially, and then over the life it will drop off, come back to zero. So, but it's a more fluid arrangement than previously, where it was a fixed number that was just reduced by repayments over a period of time. The other thing to note would just be our MRP policy. We approve the MRP policy in this document when it comes to council, and it's broadly the same, but we've made a slight tweak to reflect that we need to write down some of the equity in our subsidiary companies. So we've added that following a review with our Treasury Management advisors. Aside from that, the broad format is similar to prior years, and we remain in a good position, but obviously given our overall level of debt and our exposures therefore to interest rate changes, we're still obviously constantly managing that position through our Treasury team, and we've brought in the forecast and how that's impacted our general fund budget into our MTFS, which will come as part of the full budget. That's managed within those envelopes, so we expect to have a balanced budget for next year, and obviously continuing work to bridge future gaps. But it's a key factor in that, and we need to keep that under consideration. So, thank you, Chair.
Anyone got any comments? Councillor Headley.
You used the word fluid just now when you were talking about, I think it was leases. Is that a euphemism for increased risk?
It's not really increased risk. It's the valuation is so it's now when I say fluid, because they need to be remeasured annually, they don't sit at that fixed amount. So there's a reassessment of future cash flows annually, and therefore the value on the balance sheet changes where it never used to change in the same way. So where it's important, although it's a sort of technical accounting thing, it doesn't create any more concern for our leases per se. But what it does do is potentially, if it pushes our debt up, obviously we're compared to other councils, and we've got currently about 187 million, I think, in those 3 leases. So if they became 200 million, we've suddenly got an extra 13 million of debt. That's an accounting calculation essentially, but it may put us at a slightly higher position compared to our peers. So we're just flagging it to you as members, so you know that there's something moving in the background. There may not actually be an issue. It may just be that. But equally, we've got other things where we are genuinely taking on debt to meet priority projects.
So just to get it clear, we are taking on debt.
With the lease, so the finance leases we hold, they are debt effectively. So all finance leases are debt. So we're not taking on new leases, but the existing leases are being remeasured. Yeah.
Okay, so when these properties, when we invested in these properties, I think it was a balance between income from the occupiers of those. Given the present climate and quite high-profile companies have re-evaluated their extent of their portfolios, number of, particularly high streets, are we at risk for some of those leaseholders defaulting on the lease and we end up with a vacant premises with no income?
I think there is always a risk, and we review that with our advisors. But at the moment, we don't think that risk is material with the current tenants we've got.
Has anyone else got any points they want to make? No? Okay, so we can move on. Everyone endorsing that one? Yeah. Is that right?
We take a vote on that.
Oh,
one,
taking a
please.
vote.
Yeah.
Yep, okay.
I'll abstain because I'm confused.
No? Right. Well, I'm voting for it anyway. Right. No? Alright, those against? Abstaining. Well, joining in. Okay. Oh, it's the internal audit and counter fraud progress update. Yay!
Thank you very much, Chair. Tonight I'm bringing my regular progress updates on internal audit and counter fraud. I'm also duty bound to make you aware of the new global internal audit standards that are effective from January 2025 and will be enforced for public sector internal audit firms from April 25. So returning to my progress reports for internal audit and counter fraud, we're making good progress now in terms of delivering the audit plan. It was a struggle at the start because obviously we had a management restructure going on at the time. So trying to get audit briefs in terms of reference signed off by management was quite difficult. So we did struggle to get audits started, but we're now making significant progress in delivering the audit plan. So to date, we've completed 9 audit reviews. A further 3 are at the draft report stage. I suppose what's of concern to me is the number of limited or no assurance opinions provided by myself as head of audit is increasing, and a number of factors for that, which I'm not going to go into at the moment. And the main points arising from the audit engagements are summarised at Appendix A. So these list the audits were completed, and you can see the main points and findings arising from those audits. 2 of those audits received a limited assurance rating, scheme of delegation and the Pinnacle contract. One of the things that happens here that we have a working group, which basically I bring to the working group those limited audits, so we can explore those audits in a bit more detail as to why they were given a limited opinion. So I'm not going to go into any more detail about those limited audits. The findings are in my report, and they get discussed further at the working groups. I'd just like to move on now and talk about audit recommendations. Given we are now progressing quite rapidly with completing audits, there are a large number of live audit recommendations at the moment. We have 90 live recommendations, 90 at the moment, 27 which are overdue, require attention. So looking at fraud, returning to fraud, the fraud team has had 713 referrals to date. We've had a significant increase in the number of right-to-buy applications. My team actually vet or look at each right-to-buy application. So that means making a visit to the person's address, going through the right-to-buy application itself. The increase in right-to-buy applications is a result of the discount changes announced in the October budget. So the discounts that people can get or tenants can achieve is going down. So basically, there's been a flood of applications. Any application received before the 21st of November will be considered under the current discounts arrangements, and anything past that date will be subject to the new discounts arrangements. So there's been a flood of applications coming through to us to look at. So in terms of the headlines for counter fraud, we've achieved £99,000 worth of cashable savings and £1.2 million worth of non-cashable savings. The other headline or highlight is we've recovered 7 properties as a result of our work into illegal tenancy fraud. So as I touched on, I'm also talking about the new global internal audit standards. The global internal audit standards are a set of principles and guidelines developed by the Institute of Internal Auditors to ensure the quality and consistency of internal audit practices worldwide. Local authorities must align their internal audit functions with these new global standards, as interpreted through SIPA's application note and code of practice for internal audit in local government. The new standards for the public sector will apply from the 1st of April 2025, and all internal audit functions will need to implement the global internal audit standards. What I also like to say is that the internal audit function itself is subject to external review every 5 years. Our last review was undertaken in January 22 when the audit function was assessed as fully conforming to the standards. So we're not due another external review until 2025. I'm happy to take any questions.
Our independent person.
Thank you, Mike. Some really good progress on the fraud stuff there. Just take you back to the right to buy. I just picked out 162 right to buy cases under investigation. That seems an awful lot. I suppose the obvious question is, have you got the manpower to deal with that?
Yeah, as I said, because the rules are changing, we've seen a massive influx in terms of the number of applications. Yeah, we have sufficient resources. We have a team of 4. That is a priority for us to look at right to buy applications. Yeah, we have sufficient resources to look at those. Yes.
Anyone else want to? Yeah, Councillor Jeffrey.
Thanks, Chairman. On your overdue, it's Appendix B I can see here, unless I'm looking at the wrong report, but it's got major recommendation, but it's overdue, and that's from our 1920 audits. I'm just wondering, are you assured that they're actually making any progress on those overdue? Because I can see quite a few there's 5 major that need to be done. So I'm just wondering, are you assured that they're progressing, and why hasn't the one from essentially over 5 years ago not been completed yet?
Yeah, I mean, we have conversations with the service departments. There is a need, however, to engage with those service departments to say those recommendations, as you say, made back 5 years ago, are they still longer valid? So we are awaiting consultation with those service departments saying, we're moved on now, we're 5 years down the road, is that still a recommendation, is that still valid? So that is something we look to do, we look to achieve. So we have regular updates. We do provide management with regular reports on audit recommendations. They're all logged on our Pentana system. But there is something, there's a need for a better dialogue between myself and the service departments, and I suppose, are those recommendations still valid? So some are being progressed, some are not. So something from 5 years ago, she says, is probably no longer valid. And that's a conversation I actually need to have with the service department to ascertain what's going on, whether we're moved on or not.
Thanks, Mike. It was just my concern that because it's been left so long, I just wondered whether there was a reason the planning department had not addressed that major concern. And just out of curiosity, if it's left for so long, would it not move into the critical because of how long it's been left? I get there's sort of benchmarks, but it's just my question of if it's been left, we don't know if that's actually got worse, particularly with land charges when the council tries to recoup its money. That's the taxpayers' money that we're looking at, and it's just a bit of a concern of mine that if we're doing any operation around land charges, that we're not sort of leaving it, which could be more efficient overall.
Yeah, I mean the priority won't change. It was assessed at that point in time as critical or moderate or low. It is something that needs to be addressed, but it's scored a rating based on the risk involved with not addressing that recommendation. So if the council's going to suffer a loss of £5 million or something, it's something, a recommendation that needs to be addressed straight away. So they are assessed at that time. So the priority rating wouldn't change, but yeah, it is something that needs to be looked at and sorted.
So what's the criteria for major then? What's the criteria for major?
There's an appendix. I can't record it off the top of my head, but I think there is a
page 244.
yeah. There's Appendix E.
I've got B here.
Appendix E, action, yeah. So if it's major, it talks about high financial loss, safeguarding breach, serious injuries, significant disruption to services. So that's, Appendix E is a list of that. Sorry.
Has anyone else got any? Oh, Councillor Headley, here we go.
Try and keep it short. Given that a lot of transactions the council undertakes will be online transactions, can you give us any assurance that staff that deal with online transactions have regular updates on counter fraud procedures?
Yeah, we undertake counter fraud training for members of staff as well as members, and we have a counter fraud policy and strategy. But we do consult with people, so there's regular updates on counter fraud, and also we have from NAFIN alerts as to basically trends in fraud. What are the current fraudsters up to? What the high risk? So we publicise those NAFIN newsletters to staff, particularly in finance departments. So this is a local. This is a national trend, so bank mandate fraud, scamming, things like that. So we get lots of regular updates from NAFIN, which we then pass on to the appropriate departments, highlighting to them this is the risk now. This is what's been attempted. So there's lots of email scams going on. So yeah, so we get regular updates from some like the likes of NAFIN, National Anti-Fraud Network, and then we pass that information on to said department to make them aware, basically, the latest fraud or attempted scams going on in the industry.
So there is a record, a training log of line managers having had that training, including their staff.
Yeah, fraud awareness is a mandatory e-learning that they must complete.
Last question. There's been greater emphasis on the publicity around cyber fraud. Can you give us an assurance that we are on top of policies for countering cyber fraud?
Yeah, we undertake penetration tests as part of the council test. We also had an external review on cyber threat and cyber security. We also got policies and procedures in place. The threat of cyber attack is something that's regularly discussed, and the comms newsletters that go around highlight the risk of cyber threats to the council. So as an authority, there's regular updates and newsletters that are basically put on BASNet. These are the risks of, and we also have a corporate risk, which Sarah could probably come at this point, which addresses cyber security. But yeah, we have external reviews, we're externally assessed, and we get regular training in terms of cyber security.
Know the answer to this. When was the last time members were required to do training on cyber security?
Not sure whether there's any providers that they rolled out laptops to members, or whether there was any training provided at that point in time.
Through you, Chairman, I think it's essential that if the staff are having training, particularly on cyber risks, members could be invited to a training session. Whether they intend to, attend that session is up to them. But I think they should have the opportunity to be made aware of the training that is available to staff.
Actually, Councillor Headley, you are hitting something on the head that I'm very passionate about, because I believe that all councillors, members, should all attend all training sessions. Whether you've been on the council 25 years, 5 years or 1 year, you should attend every training session, and your name should be put on a list and published on the website so people can see that each and every one of us have turned up. For instance, the other night I attended a training session on homelessness, didn't we, and temporary accommodation. I was shocked. I think, well, how many was there? 12. Now, I'd like to see the people's names printed out who didn't bother to turn up, and that should be done for everything. So perhaps we can get all the leaders involved as well with the groups and get that done. Yeah? Do you agree to me on that one?
That's what they do at council, isn't it?
Yeah, that's it. There you go. That's me having a rant. Anyone else got anything to contribute? No? Right. Okay. That's for noting. Are we all alright with that? Okay. Whose turn is it this time? Annual governance statement, action plan and assurance update. Sarah.
Thank you. So this is our regular report, just to provide the committee with the outcome of the Q3 assurance process surrounding the effectiveness and compliance with the council's arrangements, and an update on the progress in respect to the council's annual governance statement. So in relation to the Q3 assurance process, the concerns raised are categorised into 3 themes. So we have one around compliance. So we do have an AGS action around the role of the manager. We haven't fully addressed the core reasons for the issues highlighted, but we have got plans for the actions to be reviewed. The other one was around service effectiveness, so I won't go through all of them, but for example, temporary accommodation, which my colleagues have already discussed. We've got the contract extension for Morgan Sindall, We've got the annual tenant satisfaction survey, satisfaction levels, and the Pinnacle cleaning contract is not currently meeting the full standards. So we have action plans in place for all of those that we've mentioned. The last one was the senior management restructure. So obviously we are in a state of transition with a number of key staff exiting the organisation, specifically in HR, legal and finance. But we do have transition and recruitment activities underway, but it does remain a risk that we need to consider. So we met with the new Chief Executive earlier this week, and all of these points were raised, and we do have actions to, or agreed way forward to address each of those. So I'm happy to take any questions.
Okay, I just want to go in first, as it's my right. The cleaning, Pinnacle cleaning. Cleaning is so important, so important. So do you think that we can make a real push on that and try and get that one done, please?
Yep, so we have got an action plan in place, and we are also proposing to bring it to the working group so you can do a bit of a deep dive into what the findings were from the audit and what progress they've made so far.
Has anyone else got any pointers? Our independent person.
Thank you. Thanks, Sarah. Sarah, sorry, you touched on the role of the manager, and I saw it in one of the papers there. But can you just expand on what's proposed, please?
Yeah. So one of the issues that we're facing across the council is compliance. So obviously all officers have lots and lots of priorities. So we ask them for key returns, whether it's budget monitoring, updating your audit recs, updating your risks, and we have pockets within the council where that's not consistent. That's not to say, you know, everyone's in the same boat. We do have some very good returns that come in. So it was an area that we asked under the role of the manager just to detail what the priorities are and then on what the expectations are. So it's something we've been trying to address for a few years. Did discuss it with the Chief Executive, and it is high on his list to address that going forward. So we should be able to give you a bit more assurance in the coming months.
Okay, thank you. So more like almost like a standardised approach to how a manager should deal with certain compliance issues. Is that what you're saying? Yeah. Okay. Thank you.
Anyone else got any points they'd like to push across? Councillor Jeffrey, Councillor Headley, you was having a chat there, so I'll take it you've got something you want to say.
I couldn't open the attachment. You shouldn't be able to do it.
That's old age, you know.
Our school teacher.
Right, that's for noting, yeah? Okay. Corporate risk management update, including the work of the Audit and Risk Committee working group. Sarah.
Okay, so this report then is just to provide you with an overview of the council's risk management arrangements and the activities during Q3, and to signpost any future work that we have planned. So we do have a robust risk management framework, and it's generally working well across the organisation. So enclosure number 1 contains all of the corporate and significant risks that are currently above appetite. These were reviewed with the new Chief Executive and Executive Director, and there are no specific concerns that we need to escalate to the committee at this time. A number of the risks have already been discussed at the Audit and Risk Working Group, where members confirmed they were happy with the actions being taken to mitigate these risks. We've continued to review and report on the risk profiles for the council, and the risk management team continuously work with services to review the council's risks as part of its governance arrangements. So we currently have 17 corporate risks which are on enclosure number 2, and we do propose to add a new corporate risk in relation to devolution and the local government review. So you'll see that on the next report. Just to give you an overview then, so the waste strategy is currently assessed as a red risk. However, costed options have been prepared, and the forecast costs for implementation will have a high degree of confidence. And then we've also got cyber security, which is assessed as risk, also being reviewed with the working group. There are a number of corporate risks that are amber, and they impact the council's governance arrangements, and they were highlighted within the annual governance statement report. So just for an overview, these relate to things like project management, performance management, information governance and the local plan. The working group have had two meetings so far to date. They've covered things like benefit fraud, housing repairs, private rented sector and financial position, and we do have another meeting scheduled for Monday. Thank you.
Come on, anyone got a comment? Councillor Headley.
Just reading through the papers, Chairman, and I've noticed some of the commentaries on the Essex County Council Pension Fund. I need to have it recorded that I actually sit on the pension board, the investment steering group. So it doesn't affect Basildon, but I wouldn't want anybody to think I was hiding the fact that I'm on the pension fund.
Has anyone else got anything they want to join in? Councillor Jeffrey. And you, Joe?
Just on page 275, enclosure 1, it's got the failure to replace Civica housing management system. You can see that it's maintained at quite a high level risk. So I'm just wondering how is progress on trying to find its replacement?
So we are continuing to finalise specification. So the next few weeks should be in a position to know what the way forward will be. So I think in Q4 that risk will be mitigated to a fairly large degree.
Okay, you happy with that, George? Okay, Gillian?
Just to say, you said that generally the robust system's working well. What's not working well?
So things that we've had a recent audit on risk management. So it was that we can't always evidence, for example, that risk management is discussed. So as in minutes. However, for the meetings that I attend, Owen and colleagues here, for those meetings, we've got assurance that obviously they are being discussed. So that's something that we need to address. And the other thing is, the updates sometimes are not provided in a timely manner, or they may not give us the full picture of what's going on with the risk. But with the meetings at CLT, etc., then obviously they are talking through those, and they're not raising anything back to me that have got any major concerns.
So it's a process that's being reviewed as such. Lovely, thank you.
Anyone else want to say something?
I'm not sure where it comes in the agenda, Chairman.
Go for it.
Okay, can officers give us, I think it was in a cabinet report, but there's been changes to employers' national insurance. Are we able to quantify what that will cost the council and how we intend to mitigate that cost? Because I believe we've not had any assurance from the government that they will underwrite that cost for public authorities.
The cost is around £600,000 to the council, around 600. So the government has said, as part of the final settlement, they will announce the levels of support they are giving councils to offset that cost. So obviously we're expecting that in early February, but we haven't had it yet. We are being prudent on our estimates. We think that will only part fund it, but we won't know that until we get the actual allocation from central government.
If I can come back, Chairman, through you, 600,000 sounds a lot of loose change. If the government part fund it, will that just be for 1 year, or will that continue year on year?
Assumptions that have been ongoing funding will be built into the base funding that we get from central government.
Anyone else want to get involved in this one? No? Okay. Noted. Yeah. Lastly, Audit and Risk Work Programme. Does anyone want anything put in, please? All of us.
Sorry. Did we not discuss something and I suggested something to you and you said, oh yeah, we'll add that, and I've forgotten what it is now.
Don't ask me, I'm old, so you better remember it.
When remember, I'll give you a bell.
Can that be to be advised? Yeah? Anyone? No? Anything else? It looks like we're all done.
Just to endorse it, yeah.
Okay, well that's the end of the meeting. Thank you for everyone for attending and have a safe journey home.
That's really cool.
Thank you.